Start broadcast.
The broadcast is now starting. All attendees are in listen-only mode.
Good morning. This is Mark Landholm with Premier Life Annuities. I'd like to welcome everyone here this morning on Monday morning. We're going to be talking with Sandy Petrie from Mutual of Omaha and United of Omaha. Today's webinar is solving one need using multiple products. This way we can use not only IULs, ULs, and term products to get the best combination of them going for each client's individual needs. Sandy, welcome this morning. I hope you're finding all things well and ready to go with our peanut butter and jelly presentation of solving one need using multiple products.
Yes, I am. Thank you, Mark. And thank you, everyone, for joining me today. Just as Mark had indicated, there are some things that do work better together. Peanut butter and jelly is one of those examples. So just by mixing things together, they work better. Now, throughout this presentation, we will discover how a combination of GUL and IUL policies may be right for your clients. First, let's talk about the differences between GUL and an Income Advantage IUL policy. With a GUL policy, the death benefit can be guaranteed for a period up to the client's age 120. We often refer to this as lifetime coverage. If the client chooses a guarantee to age 120 and pay their no-lapse guaranteed premiums they are quoted when they purchase their policy on time and as planned, they are guaranteed coverage for as long as they live. Clients also have the option to guarantee their death benefit for a shorter amount of time, which is referred to as dialing down the guarantee period. By doing this, they will be charged a lower premium throughout the life of their policy. An Income Advantage IUL policy also provides a death benefit, but with the death benefit, it's only guaranteed for a minimum period, but based on how much indexed interest is credited, it could last for the insured's lifetime. This type of policy has greater cash accumulation than a GUL, and because the earnings are based on performance of a market index, it results in greater accumulation potential than the traditional UL policy. The cash accumulation can be accessed to supplement retirement income or to pay college tuition expenses or for any other need that may arise in the future. So in summary, a GUL is for client that is more death benefit focused, and an IUL is for a client who has a death benefit need, but like the fact that future income potential is there. Okay. Now, all qualifying GUL and Income Advantage UL policies come with additional benefits at no charge. Now, the guaranteed refund option or the Grow Rider is one of them. Now, this feature provides the client with flexibility if things change down the road. Now, if the client no longer needs their coverage, they have 7 60-day windows in which they can receive their premiums back. The first 60-day period occurs following the 15th anniversary. At this time, the policyholder can receive up to 50% of their premiums back. The other 6 60-day periods occur after policy years 20, 21, all the way through 25. Now, during these windows, the policyholder can get up to 100% of their premiums refunded to them. Okay, both the UL and the GUL are competitive products on their own. But let's look at an example. In this case, we have a case study, Rick, to see how these two types of policies could work better together. Okay, so Rick is a dentist. He's in overall good health. He has a need for $5 million of coverage. He has 3 young children, and when he comes to you, he's initially thinking he wants a whole life policy. The premium for that policy would be $63,400 per year. Knowing that he is initially looking at just the death benefit, you could show him a GUL as the only solution for $5 million of coverage that's guaranteed to age 120. Now this would cost $33,962 per year. But knowing that his needs may change down the road, you could also split the $5 million of coverage among multiple policies. The total premium remains the same, 2 GUL policies instead of 1, but by doing this, Rick has the flexibility to surrender one of those policies in the future and get a full refund of premiums for that second policy that he surrendered. So let's look at an example here. So if Rick decides he only needs $3 million of coverage at year 25, he could surrender the $2 million policy and get back $339,620 because he's exercising that guaranteed refund option rider to get that money back. His remaining premium for his $3 million policy would only be $20,377. So keep that in mind when you're looking at these coverages. It doesn't have to be one policy for $5 million. There's a definite advantage by splitting them into 2 policies. All right. Another option you could propose would be a $2 million GUL that is guaranteed to age 120, and a $3 million IUL that he pays into for 25 years. He chooses his initial IUL premium of $46,415 based on wanting to pay no more than the total of $60,000 per year between both policies up until age 65. So with this strategy, his total annual premium would be $60,000 for 25 years and $13,585 thereafter. So in every year, he's paying less than he would have with the original whole life policy that he was looking at. So what's the benefit to this strategy? So let's look at a few scenarios. All of these situations assume that Rick's average is a consistent 6% indexed interest credited rate using standard loans. Okay, so let's look at this. Okay, first, what if Rick's health deteriorates and he wants to maximize his coverage? He can continue both policies, and at age 85, he has $8.5 million in coverage, and at age 100, he would have over $6 million in coverage. In comparison to the whole life policy he was considering, the whole life death benefit would have just been under $7 million at age 85 and just over $9 million at age 100. Plus, with the IUL-GUL combination, if his health deteriorates so much that he's unable that he might be able to qualify for the accelerated death benefit rider for chronic illness. Okay, now that would give him up to $1 million of coverage while he's still alive, subject to the policy or rider limitations, without impacting the cash accumulation portion of the indexed universal life policy. So if he were to use the chronic illness rider on a whole life policy, the cash accumulation values would drop dramatically. So the chronic illness protection is built in to the IUL and the GUL coverage, again, giving him that up to $1 million of coverage if he qualifies based on a critical or chronic illness. Okay. Now, a second scenario, what if Rick can't afford to pay any more premiums after 25 years, but he still wants to keep the coverage? Okay. An option would be to recalculate what he'd have to pay annually for 20 years in order to still guarantee his GUL coverage up to age 120. Now that premium would be $15,250. He can start taking distributions from his IUL policy to pay for his GUL policy. If he wanted to pay for 20 years and still have his GUL guaranteed to age 120, his new annual premium for the next 20 years would be $15,250. Okay? If he started taking 20-year distributions in the amount of $14,389 from his GUL policy to start paying his GUL policy starting in year 26, he would still have a combined projected death benefit of $7.8 million at age 85 and over $15 million at age 100. In comparison to that whole life policy he was considering, the whole life death benefit would have just been under $7 million at 85 and just over $9 million at age 100. So there's definite benefit as far as the death benefit goes in splitting these policies. Now let's think about what might happen if Rick's retirement income falls short of what he expected. So possibly he lived longer than he thought he would, or he just didn't plan for his retirement income sufficiently. He can start taking annual disbursements from his policy. In this example, in year 26, he could start taking 20 years of disbursements in the amount of $90,000. So even if he does this, he would still have a death benefit at age 85 of over $3 million, and at age 100, $5.7 million of dollars worth of death benefit. Okay, now let's look at example, one last scenario, okay? So what if Rick no longer needs life insurance, okay? But maybe he still has a need for supplemental retirement income and he wants to maximize his income potential. Rick has the option to surrender his GUL policy in year 25 because of that guaranteed refund option rider that's included with the policy. He gets $339,625 back from the guaranteed refund option rider that he can choose to pay into his IUL policy. Then in year 27, he can start taking annual disbursements for 20 years in the amount of $185,000. So with this strategy, if Rick died at age 85, even though he no longer had a death benefit need, he would still have $1.35 million to leave to his beneficiaries. And at age 100, he would just have over $59,000 left as a death benefit. So still a substantial death benefit at age 100 to cover his final expenses. So who might be interested in this strategy? Okay. You could think of a number of people. It could be younger clients who want to take advantage of the time they have to earn that interest. It could be middle-aged clients who are at their peak earning years that have the money to purchase a substantial policy. Or, it could be retirees who are looking to maximize what they already saved or who may have limited options as a result of their income. And another great place to look is business owners. They might be looking for insurance needs, but also planning for their future retirement as far as the business goes. Now, if you're thinking that these two separate policies lead to more paperwork, that's not true. At United of Omaha, you can purchase an IUL and a GUL with only one application. All you need to do is simply include a cover sheet as far as how much coverage you want issued for each policy type. It's as easy as that. So one policy, one application, and they can have two separate policies. So as you can see, for a number of planning scenarios, combining two policies together may help your clients do a better job of reaching their financial goals. So consider the Income Advantage IUL and the GUL combination when working with your clients. Another sales idea for you, the IUL and the win-win. Okay. In this example, it's a 40-year-old male, good income, big mortgage, young children. Now, this client always meant to put away more for college funding and retirement. Yeah, I'm sure you have clients that sounds pretty familiar. Well, a combination of term and IUL may help with those issues. So with this big future commitment like the young children, the college education that he wants for his children, and a mortgage, he needs more protection against the risk that he will die prematurely. At the same time, he has needs and probably wants to put away for future commitments. Now, if he says to you that he can put away $500 a month into a solution, here's an idea for you. A $1 million term policy, this is assuming, preferred non-tobacco, he would take $80 per month to pay for that. That would provide a death benefit his beneficiaries could use to pay for the mortgage and college funding in the event of a premature death. But at the same time, take the remaining $420 and put into a maximum funded IUL policy. Again, we're assuming preferred non-tobacco with a credit rating of 6.69%. Now, your client would have an additional $391,313 in death benefit, and just as importantly, he would have a vehicle for building tax-advantaged income for the future. Let's say your client lives and continues to fund the IUL policy. At age 67, when he reaches full retirement age, he could have $286,287 in cash surrender value from the premiums of just over $36,000 he paid in over 27 years. He could have even more cash if he put the same into a mutual fund, maybe, but a mutual fund can lose value. What if you want the money at a particular time and the market is down? While the IUL interest credit rate could be lower than 6.69% rate in this example, the cash value once credited can't go down, however the market performs. Okay? So if the market's performing poorly, it's not going to go down. Those premiums provide insurance protection in addition to building cash value over those years. So at age 67, your client can keep the policy, surrender the policy, and get all the cash value, take a smaller withdrawal, or even take regular income from the cash. Now, what about the term policy here? Now, having the same dollars to purchase two policies, the term and the IUL, is definitely a win-win because it does provide that death benefit, but there's more. The term policy, our Term Life Answers policy, has a very liberal conversion privilege. So if he wanted to convert the term policy, either all of it or part of it, to a GUL policy, he can do that in the future and not go through underwriting. It's guaranteed convertibility to our most competitive products like our GUL, even an IUL. You never have to go through underwriting. So if his health deteriorates and he wants permanent coverage, but he's not going to qualify, convert it to these permanent coverages. It's also going to include the accelerated rider for chronic illness. so he can take advantage of that as well. So I guess, help your clients. Think outside of the box. Think of multiple products that can be used in a combination to give your clients the most benefits and the most flexibility. Things change. You never know what is going to happen in the future. Now, we can help you with your marketing efforts. United of Omaha has prospecting material you can use to reach potential clients to talk about IULs, GULs, term coverage. This is just one example of our prospecting brochure that has a tear-off reply card. This is for our IUL product. Okay. We also have additional training that you can go to a dedicated website for IUL. It's called www.discoveriul.com. There's training videos out there, anything that you would need for additional training on IUL. You can also reach out to premier companies. They would be happy to provide you with additional training on IUL if you're just not comfortable with it. Keep in mind, United of Omaha has a full product portfolio. The fully underwritten products, we have our Income Advantage IUL that we've been talking about, our Guaranteed Universal Life, also our Term Life Answers. We also have simplified issue products that you might be interested in as well. These products provide simplified issue, meaning it's limited underwriting. There's no paramed exam, no attending physician statements. Those products on the simplified issue basis would be our Living Promise Final Expense, also Term Life Express, and we have a Children's Whole Life. Okay, so keep those in mind when you're working with clients. That's all I had for the presentation, Mark. I'm not sure if there's any questions from the attendees.
Right now, Sandy, we do not have any questions. We had quite a few on the webinar, so you did a fantastic job. I want to remind the agents that we do have a recording. We are recording this webinar so that you have access to that. Also want to give you our phone number here at Premier, 800-365-8208, and just ask for a life marketer. All these products that Sandy was talking about through Mutual of Omaha and United of Omaha are available through us. The traditional life insurance is with our United of Omaha line and have been very good with supplier for us. United of Omaha is very easy to work with. One of the things I find United of Omaha is great to work with is on their underwriting side, and I want to compliment Sandy and their group there because we find that they do a very good job of finding the best product for each company. So the webinar recording is accessible, like I said, right from our webpage. If you go down to the YouTube logo at the bottom of the page, we have links to all our past webinars. Those agents that weren't able to attend will be sending out the webinar recording automatically. So, Sandy, do you have anything else you need to add to this? Any further thoughts?
You know what? I don't. Just keep in mind there's multiple products out there, and sometimes multiple products are better fit for your clients. So just reach out to Premier if you ever have a question regarding which product or products would be better for your client, and they'll be happy to help.
Thank you again, Sandy, and thank you everyone for attending. Again, Premier's phone number is 800-365-8208, and ask for a life marketer. We can help, and we're there to help with every case that you come up with. Thank you, everyone, and have a great rest of Monday.